So last month, TREB reported that the average selling price across all home types in the GTA is more than $1.089 million, down from 1.1 from the previous month, but higher than the 931,000 average price a year ago. They also found that home buyers had fewer options last month, as the number of new listings decreased by almost 13%. So Lisa, I'm going to start with you. What's going on here with the housing market? It seems very robust. It has cooled slightly, but it's still not accessible for potential buyers. What are your thoughts on this?
You know, it's one thing that we've been advocating for probably the last year, and that is that we have a supply issue. And TREB put out in the beginning of the year our economic forecast, as well as we came up with the project called the Missing Middle, which would create 300 to 400,000 homes. So there's opportunity, and I know that we've been meeting with policymakers regularly since the beginning of the year in talking about this project and really figuring out where we can cut some of this red tape. Because one of the biggest challenges that we know, what we really witnessed in 2020 is people reevaluating their lifestyles, reevaluating where money really is made. And of course, looking at real estate as a whole new avenue. And if we look at even a history of real estate, what we recognize is it's one of the main sources of how people created wealth. And if we take that into consideration and look at the last year, and record-breaking months, so after month, and even walking into 2021, it was the same thing. January record, February, March, April, and May. That's when we started to see the transition. We also knew this was going to happen. It was almost like a deja vu of last year. And as soon as the economy would start opening up, we knew that there would be a little bit more, either a slowdown in that aspect, especially having to have gone through the pandemic all these months, right? So we expected that there would have been a shift anyway. And in any marketplace over the years, even if you watch the transactions of TREB stats over the years, you will see it's never just a constant upward, right? It's that teeter-totter effect, the peaks and valleys. So of course we expect to see, peaks again, maybe not to the point of record breaking, but overall for 2021, I will say that we estimated that we expected that it was going to be a strong marketplace overall.
Yeah, so it's very interesting that you say that. So I know, just talking with a few friends and people in the industry, they're just waiting for home prices just to drop, and they're expecting a correction to happen, and just so then they can make them just more affordable. But is that ever going to happen from where we are? And Carl, I just want to get your perspective on this, because there are cyclical patterns to this, but are we going to actually experience a correction to the point where it becomes affordable for people just try to get into the market for instead of just an investment purpose for a long-term house to live in?
Well, it's a great question. And I think you hit the nail on the head. There's some cyclical factors that are really driving this market. If we think about interest rates being driven to all-time lows, the Bank of Canada engaging in quantitative easing, the prime rate down to all-time lows, that's rocket fuel for the housing market. And as Lisa mentioned, supply is definitely an issue, particularly in Toronto and Vancouver, where we have constrained land supplies because of public policy, like the Green Belt and things like that. There's also what I would call a secular trend that's going on too. Canadians love housing. There's a very strong incentive for housing. It's marketed when you talk to immigrants around the world about owning a home. There's ethnic enclaves in the GTA and Vancouver which drive people towards housing. So it's a demand and supply issue. And that's really what's been going on. And there's a secular part to it that's going to be there no matter what. People are drawn to housing. The issue of a bubble or a correction in the market, whatever metric you're looking at, whether it's a price to income ratio or a price to rent ratio, Canadian housing compared to other markets on an apples to apples basis is expensive. It definitely looks like it's overvalued in some places. There are competing reasons for that, again, because of selective supply issues, things like that. And to say that things don't correct is a very big misnomer. If anybody remembers way back in the early 90s, late 80s, we had a bubble in the GTA which corrected. In the United States, everybody uses that as kind of the flagship for big corrections after the subprime mortgage crisis. The question I always ask, though, if there's going to be a correction, is what's going to be the trigger for it? We just had a massive pandemic. It caused a lot of instability in the economy. That didn't do it. We've seen big, recessions. That didn't do it. Unemployment's gone up. That hasn't done it. To me, the only thing that's really going to kill the housing market here is a sudden and abrupt shift in interest rates. And I don't see that happening, even though we have some inflation risks on the horizon. I don't see a material jump up in unemployment, particularly in white-collar jobs, because it's those types of jobs, not the high-touch sort of restaurant, accommodation, service-oriented jobs that we lost during the pandemic, the white-collar jobs that do it. Again, don't see anything like that in the crystal balls. Everybody's crystal balls are fuzzy, but to me, I don't see that in the horizon, and so I don't foresee a massive correction in housing prices. That being said, real estate, we can talk macro all day long, but real estate is a local game and they're local markets. And there are some properties that have, are priced well above where they should be. If they were to trade again next year, maybe they would get a lower price. So that's something that people should be mindful of. And I say that with a bit of trepidation because I was actually engaged in a multiple bidding war yesterday on a house. So there you go, firsthand experience. But definitely, I would never say never when it comes to housing. Housing asset prices are like any asset price; they're prone to correction.
Gotcha. Good. Yes, Lisa, go ahead.
Okay, I just have to add something to that. So firstly, I will say that in speaking, so TREB is also partners to many affiliations around the world. We are partner boards to Florida Association of Realtors, Miami Association of Realtors. In this last year, we also became partners to France and to CELA, so all of South America. And I will also tell you that in speaking, I've had world conferences with fellow presidents around the world. And I will just I know we're focusing on primarily on the GTA right now, but I will tell you the demand for real estate is not just an Ontario situation, a GTA situation, a Canadian situation. Around the world, we're seeing the same scenario pop up. And I'm talking, and I've had a conference with all of Europe, and yes. They're stating the same thing. So ultimately, I think it's more of that makeshift of recognizing where wealth is really created. And if you if anyone on this call is ever listening, it takes an opportunity to take even the Toronto course that's offered by Ryerson, fellow alumni. So I will put that out there. But it actually states that this is going to happen in that course. And it talks about the exchange of wealth. And that this is what we were going to see over time. So it's quite interesting that when we were going through the pandemic in the last year and actually witnessing everything that was stated in that program unfold just as it was stated in the textbooks. So I just wanted to make shift of just that this isn't just a Canadian situation, and ultimately our housing, the price of real estate today is at par. We were actually one of the lower ends compared to the world, and now we're up there with the world in terms of price point.
Right. It's very interesting you say that because very recently Bloomberg released the report based off key economic indicators, and they stated it was New Zealand, it was Canada, and it was Sweden who were identified as having markets in the world that are most at risk for overheating. And to add to that, furthermore, in April, Canadians, interesting is that Canadians took out almost $18 billion of new mortgage debt, and that includes home equity loans. So if I can pivot a little bit towards Robert and Isaac, I'm going to start with Robert here. With regards to interest rates being, low and just to weather the storm of the pandemic, are potential buyers overextending themselves and in over their heads trying to lock in a mortgage at these low interest rates, but they don't know that there could be an upside to it, that there could be interest rate risk if the Bank of Canada decides to just hike it up a little bit. How's that fair for our economy, and is what's really happening from a bank's or central bank's perspective on that?
Well, you're asking the question to a bank economist. I'm going to tell you absolutely not. They're not overextended because financial institutions do an excellent job at vetting their clients and not extending loans to people who can't afford to have those loans. I mean, that's I'm obviously being a little bit facetious here, but you have to keep in mind that there's been a number of regulatory changes that have been put in place since to the financial crisis of 08-09, just to address that very specific issue of having Canadians not overextend themselves, and most of them, and most recently has been the stress test, and let me tell you, the stress test is very stringent. I mean, you're stressing people, borrowers at more than 2 percentage point above what the client rate. Mm-hmm. This provides tremendous buffer here for future increases in interest rate. And of course, I mean, when interest rates are the lowest we've ever seen, they can only go up from there. And so, no, it's absolutely prudent to have rules in place to make sure that people will be able to afford higher interest rates when they renew, and up to 5 years down the road. So, but that being said, I mean, it is clearly, Canadians are clearly highly indebted. This precedes well before the pandemic. There's been for a number of at least 4 or 5 years now, that's been the number one vulnerability for the Bank of Canada, and we totally agree. When you look at the numbers, it's hard to refute them. But that being said, the fact that Canadians are highly indebted, does that automatically means trouble down the road? Our view is not. I think Canadians can manage that debt. But once interest rates start to rise and potentially quite meaningfully, probably not, as Carl said, probably not a spike in very short order, but over time, I can easily see hundreds of basis points of increase over the next few years. It means that all the activity we have pulled forward by dropping interest rates so much, will have to be unwound. And we're going to see some slower activity down the road. It will make it harder for people to afford having a mortgage and buy at current levels of price levels.
Right. So that being said, and it's all very interesting, would you also recommend, if someone wants to shop for a mortgage nowadays, would you recommend them going variable or try to fix the rate for a longer period of time as best as they can?
My answer is yes.
Excellent. Okay. I love the direction.
I mean, there's no perfect answer, really. Everybody's tolerance to risk differs, and really, I usually stay clear from providing those kinds of advice, because it's a lot of things can happen. A fourth wave. Now we're expecting interest rates to increase over the next year, and if we have a really bad new variant or some really bad fourth wave, and then the Bank of Canada will keep interest rates low again, and then my advice is
there's been a number of studies that have shown that variable rate mortgages do better over the long haul in terms of your interest costs. And there's good reason for that. The yield curve is usually upward sloping. You very rarely get an inverted yield curve. So that's part of it.
But there's been a few windows where it's been the opposite, and that could be one of them.
It's all about timing. But I think if people were to play that game really well, what you want to do is go variable, but set your payments at a level that's a fixed rate. So you're getting that benefit of paying down the principal much faster. And if interest rates reset, you've got some hedging room there. So there's ways of playing that.
Some advice.
Sorry, I just have to say, I just had that, but you sorry guys, I just have to add in there 2 cents as well, just because I was a mortgage broker for many years before I went into the real estate world. And I will say that it also comes down to short-term and long-term goals, and what it is that you're doing with the property. Is it an investment property? Is it in for the long term? It really comes down to those things. There is no straight answer for every single person.
Absolutely.
Yep. So if we can pivot here, guys. So I'm actually turn my attention to Isaac here, and Lisa, you mentioned that this is a supply side issue, and for me personally, so my experience comes from the government sector and policy side, but I'm hearing you, but Isaac, you know, is there really a supply side issue from developers' perspective? And what's really keeping developers from getting shovels in the ground to actually just start building more? Is that really the solution to all this? Or is there more to this that we're really not understanding yet?
Yeah, no, absolutely. The process of approvals is something that many developers have been screaming about for several years, and is becoming even more and more of a problem, especially with affordability becoming more of an issue. When you look at the process of going from a piece of dirt, raw land to an approved site plan to be able to actually start could take sometimes 3 to 4 years, apart from the cost that's also associated with it. And then you look at the last 14 months with the city actually shutting down and actually working from home and not having the ability to actually go to the counter and actually pull permits or talk to the site manager or to the engineers is made the process even longer. That's why you're going to continue to see more cost increase from the developer's point of view, which you're going to see that flow through back to the purchasers. So not only are we seeing an increase in the supplies and the cost of construction, but the process of getting approvals continue to stretch out, which is making the cost of the overall project expensive, which is making the property unaffordable.
Right, right. And in terms of you know, what potential buyers are looking for. So is it safe to say that, you know, in the city, everyone's just looking for a condo, and in the suburbs, everyone's just looking for a detached, but no, they're just not building fast enough. So what are the preferences that you've been noticing from potential buyers in terms of the type of housing that people are looking for, and what's going to be expected to come in the future to stay competitive?
Yeah, I think it's been across the board. You know, at first, obviously, it was condos. Then we saw the shift to stacked townhouses when regular townhouses started to creep over 700, 800,000. Then we saw in areas around the GTA, where it'd be in Mimico area or in the east, or even in the suburban area where detached homes were too expensive. They came out with a more affordable product, which was stacks. Now those stacks are finished. People are getting more familiar with stacked townhouses and now looking at other options, because even with the stacks, they're realizing it's also too small for some families. So they're moving back to towns, which is again increasing that. But condos, we're seeing condos even selling at high prices upwards in Hamilton. Even in Durham, we're seeing condos which surprisingly selling at high prices, even in York region. And of course, in Mississauga, we're seeing those. And I'm hearing even in Brampton now, condos are starting up all along Queen Street. So again, depending on the location, we're seeing a wide variety. What we've seen over the last 12 months is obviously a lot of families moving a little bit outside the city, whether it be like in Vaughan, Kleinburg. We're looking for larger pieces of land for the best dollar for the property. But at the same time, we're still seeing condos and low rise in the city growing.
Right, right. Yeah. And I really like how you said that there's certain areas and regions that are experiencing different, factors in terms of, what's being demanded. So if I can just switch back into Treb here on the June report, Lisa, months of inventory across the GTA, across all home types, were relatively low in June. It's hovering around like 1.2. But surprisingly for Halton, Peel, Durham, Dufferin, and Simcoe, it's below 1. However, York Region and Toronto, 1.5. So is months inventory a good indicator for people to look at to say, you know what, we're in a seller's buyer's balanced market? And what does that actually mean in terms of finding, a vacancy here and just locking in a property?
Well, there's a couple of things that I have to talk about before I get to that. So Isaac brought up a lot of really good points. And we also have to keep in mind, even in the new construction era of condos, a developer puts out, they've got 1,000 units, they're getting 2,000 applications right now. That's how busy new construction is. And in terms of one thing that we forget about too is that we're an aging population. So we also have a population that doesn't want to move because there isn't the type of housing that is suiting them to them. So there, Isaac can actually even speak on this. There's a few developers that have created product that is like that bungalow loft, and which is now a more preferred product. But the problem is space. And the fact that cities all over the GTA now are saying, no, you've only got this parameter to build on, and so now we're making them smaller and tighter and everything else. And of course, towns and stacks and all of those things are great as that either that single person or that new first time buyer into the marketplace. But we have to be realistic and say, does that suit that baby boomer, for example? And so what we need is a good mix of housing that is going to support population and the populations to come. And in terms of now going back to your question, the challenge is, prior to the pandemic, Toronto was already hot. And people, the market was already heated. And what the pandemic did is allow that marketplace to stretch and for people to see that there was more outside of 416. And that they could still commute, they could still live, they could still do everything that they were doing. So ultimately it expanded. But what we still have is that threshold. So to your question, no, it's not a good indicator of buyer seller market or where the market's going. Because at any time the market can change. And one of the things that can change a marketplace too is policymakers. And we've seen this, when we go back to, 2017, 2018, and when, the rental policies changed, for example, that took a shock to the marketplace. It was like even right now, with that we're lobbying against another tax on $2 million homes. We've been talking about this since the beginning of the year, yet it's still coming up. So the policy can also change things up a lot, and slow down and pause a marketplace. So even though you could use that as an indicator, it's not going to be significant enough because anytime there could be a shift or a halt, or even we just witnessed that with the stress test, for example. Right, we witnessed that we already expected that there was going to be a slowdown. We didn't know how much of it was going to be impacted, and we witnessed it. And what we also have to remember is we need first-time buyers to come into the marketplace. So we've got to start thinking about policies that make sense for the type of markets that we're in, and knowing that price point is so high, and what kind of financing can be created around those types of policies for the future. And even like the new to Canada programs, as we know that we're expected over 400,000 immigrants, all of those things have to really be reviewed and relooked at. That's going to make sense for the coming years. But in terms of the overall supply exchange, this is the biggest challenge. Is I can say this with my own clients, is that the response is always going to be, well, there's nowhere to move to. Right. And so that leaves the supply chain very tight. And what you're going to have to see more is more redevelopment in the future. And I mean, Isaac, I'm going to pass it to you. I mean, you can speak on that too.
Yeah, no, absolutely. And one thing we didn't talk about is that what we're now seeing is a large push for apartment buildings and purpose-built rental. And we're going to see more and more of that. Again, even in Peel region, we're now seeing purpose-built rental coming up in Brampton, all across the city. We're seeing that as well too. And of course, we saw the stats with the developer buying up with an aspiration of doing $1 billion worth of acquisition of low residential housing. So I know we talked on it a little bit in terms of where do we see the market going. The fundamentals haven't changed apart from the pandemic coming in, but really the fundamentals haven't changed. But it showed how valuable the GTA and Toronto is, that even with the borders closed, the demand for real estate, once the borders open up, that demand is only going to accelerate. And when you look at all the accelerated indirect impacts like job growth in the tech and innovation space, and what is the impact of that within the Toronto marketplace, like when we study what's happening in New York, Silicon Valley, and the impact of exits, the impact of having 2 or 3 Shopifys in Toronto, what does that do to the real estate market indirectly as excess capital comes into the space?
Yeah, you're absolutely right. Yeah, I think so. I think, when employers come in and attract so much talent, but they also need a lot of units to actually just work around it. And that usually is an incentive for development to happen. But with regards to immigration, the pandemic has really locked our borders literally to that. And, I think the Conference Board of Canada said from March to December of 2020, permanent resident emissions were down by 56% compared to 2019. So having that being said, Carl, so what happens when immigration returns back to normal levels and people actually look for places to live? Like, what does that mean for people who are right now just having a hard time trying to get in?
Well, Lisa hit the nail on the head. You need first-time buyers. They're the juice that makes the housing market spin. And so immigration will definitely be that juice. It has been that juice, for a long period of time, particularly the GTA. I think it's the third largest growing metropolitan region in North America. So that's been a big factor behind our housing market. To the point about immigration, actually, we noticed, I think it was in the last couple of stats, we saw a return of international students. And when we're talking about the rental market, they've been a big factor in driving the rental market. We did see a momentary blip after the pandemic where vacancies started to creep up. There was some in some of these urban condo units that were being rented to students where we got a little bit of vacancy there. That was probably the impact of that, but they've actually come back right away. I'm anticipating, the rental story is a very interesting one because when we talk about diversity of housing mix, there is very much a shortage of diverse rental. We are developers and institutions are now building urban high-rise rentals, and that's primarily because you can make the economics work. Your price per square foot can be at a certain level that you can build a 600 square foot, place and rent it out. The problem with that being is that there's a good group of people who want larger suites to rent, and they don't necessarily want to be in an urban footprint either. And there is not a lot of product like that right now. And so what we're starting to see, and you see this in the United States in more affordable areas, is people developing rental single family, rental townhouses. And the reason why you can do that is because municipalities are providing the land to be able to do that economically for the developer. We can't do that here in affordable markets. There are no affordable markets in the GTA to be able to do that. So we have a missing middle that can't get that kind of product in these cities, whether it's Toronto or Vancouver. Very difficult to find that product. There are other developers that are looking. If you go out to Georgian Bay, if you go out to Stratford, there's some developers that are now doing life leases. So you can actually rent a single family home for a long period of time. That's being provided to some downsizing baby boomers who don't have a long period of time, but even first time owners and stuff are looking at it. We talked a little bit about people looking for affordability and going outside of the GTA into the exurbs and other places like that, because hey, it's a lot cheaper to buy housing there. Plus your money goes, there's a bigger bang for the buck. What's facilitated that out of this pandemic has been technology. We're doing this, presentation on Zoom. I've been in meetings all day today on Zoom. Technology has allowed us to work from anywhere. And because of that, people are now realizing that, well, hey, I can move out to these places. I don't have to commute into the city. That's a benefit for the home buyer, but it's also a benefit for real estate, or companies, because now they can mine talent from just about anywhere. And I think those fundamental shifts that we've seen outside of the pandemic, these sort of secular sort of changes, are really going to change the mix of housing that's going to be demanded. And partly why we're seeing such a huge explosion in housing prices right now. You're getting migration out of people from the cities, out to the burbs, out to the other areas. There's still a shortage of ground-oriented housing in the downtown core, so that's always going to continue to go up like ridiculously. But I think where there's always risk is, if developers continue to build 600, 500 square foot, micro units, and they sell those out, because the economics are very easy to build that stuff. I've sat in pro formas where it makes a lot of sense to be able to build that, and it's profitable. And you've also got, you're not really catering to the end user with that product, you're catering to investors, small investors, who in turn, lease this stuff out to students or whatever else. And that just keeps the whole condo game going. I see a risk of oversaturation of that product over the long term, because we are not building product that is actually for end users at the end of the day. And so that's kind of my concern. If there was a concern in the market, exactly, is that missing middle that we're not building for.
Yeah, Robert, I see you nodding your head a lot. It seems like, it's everyone's singing the same song. We have a huge problem with the missing middle. We have, most of the development, correct me if I'm wrong, it's pretty much centered around transit as much as possible, and they're focusing on intensification. Is that true? Or, what does that really mean in terms of the composition of the housing market? And, alluding to what Carl said, I mean, we have technology happening as well. I mean, advancements in that and economic growth in certain respects. But I mean, how is our economy transitioning? And what does that mean in terms of how it affects preferences towards the housing market and how people pretty much allocate where they spend their money or make decisions on a daily basis?
Yeah. I hope you can hear me okay, because my connection is really, really bad. You keep cutting off, but hopefully you can hear me okay. Yep. But I just want to focus on one point, is that work from home. I mean, there was a comment made earlier that the housing market is back to normal or something, but I think something has changed. It is the work from home. I think that concept was proven over the last 15, 16 months now, which previously was just a small portion of workers that were able to work from home. And this will have some significant implications for a whole pile of stuff, but including housing. And then Carl and others have already talked about this. It opened new frontiers, right? And it was, the old adage was, you drive until you qualify, but now working from home or not having to report to a downtown office on a regular basis, I mean, allows you to drive even further. So that was a tremendous contributor to this fueling of activity in those smaller markets. And already mentioned some projects up north of Toronto, and this is actually where prices in percentage wise have increased the most over the last year. And to me, it's not entirely clear that the end of the pandemic will mean we're going to move all the way back to the office. And what we've seen over the last 15 months in terms of that demand for housing towards the exurbs in the smaller markets will suddenly disappear, and this will just be a COVID thing that we'll all be forget about in 5 years from now. And I think there's probably some lasting impact there for the exact reasons that was mentioned before, because it's many workers see that as a plus, as a benefit to be able to work from home, and also many businesses. And so at the end of the day, I don't have a perfect crystal ball as far as where are we going to land. Say a year from now, once hopefully, knock on wood, the pandemic is just going to be a bad dream. It's all going to be done. Where are we going to land on this? And probably my best guess will be a mix of everything, but we're not going back to where we were pre-COVID. And so I think this movement towards, especially for the millennials, those at the stage of starting families and looking for more space. I mean, COVID created a lot of demand for space, but it was already there before COVID, because this big bulge of millennials were just going through that life stage that they needed more space. That very small condo unit downtown Toronto was just not adequate anymore. And so we would have seen already this movement had it not been for COVID, but COVID definitely amplified that. And I think we're going to see a bit more of that.
It's interesting, Robert, you mentioned, people looking outwards, but most of the development that people are doing with multifamily right now is transit-oriented development. It is around transit nodes and things like that. And there is a bit of a mismatch pre-pandemic to post-pandemic, because people were using transit all along. And now all of a sudden there's this adversity to using transit. I've spoken to developers in a couple panels, and most of them believe we're going right back to transit right after this pandemic. Maybe they're singing from the same song sheet and convincing themselves, but that's where the developers are thinking, is continue to go after those sites along transit.
Transit is one aspect, but it's lifestyle. Lifestyle is going to be the key. Right? Like it's just like what you're seeing with the condo market come back. It's not only because of price point, because buying a detached or semi-detached or town is over $1 million. Price point is a factor, but it's also lifestyle. And that will continue to play a significant role in where people live or how they live.
Yep. Isaac, can I get your perspective on that with regards to the type of developments that are happening? And is it actually centered around transit or?
Yeah, no, I think like, again, when you look at the massive project, Mimico on the Go, and now what you're seeing is even the GO Station Metrolinx, they're partnering up with developers. So previously, developers, the province had to front the cost for those type of developments. So you saw a slowdown, but going back to what he was saying, that you're going to see more developments along transit, because now Metrolinx is saying that you want to do the development, you're going to front the cost. That's going to speed up that project being done in that location. Obviously, it's going to increase the price because now there's additional cost to be on transit. But going back to what Lisa says, it's definitely a lifestyle, because then we're seeing, again, a big push, whether it's north or outside the GTA, more land. And you're seeing multi-units, duplexes. You're seeing other different forms of housing. And that's what makes the GTA market so great, because you see so many different types of product types.
Certainly the urban planners at each city is planning around that. They're putting town centers up and want mixed density around a lot of that stuff too, right? So you're seeing these new, I mean, Brampton, you see it in Oakville, you see it in all these places where the high rises are, Mississauga at Square One City Center. I mean, that's a prime example of it, right?
Yeah.
So, yeah.
But we do have one problem though. So it's wonderful that, we've got businesses that are going to recreate themselves. We've got the different types of job sectors that are going to come into our world. And then we've got, the diversity of housing. But we have one challenge, and it's great that there's transportation, but infrastructure is not there. So, we've also got, we've got an issue that's been ongoing. And this is the challenge too, not only within from the real estate perspective, but if we look at policymakers that are constantly changing, does not help our situation, because we end up going 10 steps backwards. So what we have to really focus on right now is what are the jobs of the future? Number one, what are we going to do to push infrastructure? Because ultimately that's great that we're going to put up more houses, but if we don't have the infrastructure to support it, then we're just creating more and more gridlock, which has been the problem that has been going on for years in the GTA. And
Right.
take weather, for example, right, Edmund? Like, one massive rainstorm, and look at like Simcoe is done. You're not going.
Yeah. Yeah. So what I'd like to do, guys, and really appreciate all your great answers. I think we're really coming to consensus on a few things. And with 20 minutes left on the clock here, I'm going to open it up to the audience so that they can ask some questions directly to you. And I think we have one question. You know what we're going to do, guys? We're going to actually just call out. So if you can just unmute your mic, you can go ahead. So first off, we have Mike Radov. Would you like to?
Yes.
That's yours.
Yes. Hi, everyone. Sorry, I'm just out for a walk right now, so I can't go on camera. But yeah, I just had a question. I've been reading a lot. I met some people, because of the pandemic through social networking from California, and there's a big thing there where people are literally creating co-ownership arrangements where just to buy a house, they're hiring a lawyer and they're entering into a contract to basically split the mortgage because that's the only way they're seeing to benefit from the skyrocketing housing prices, because they can't afford it otherwise. I mean, what's going to be the impact of a whole generation of young people that have been priced out of this very accessible way to build wealth and equity that isn't really accessible for any other kind of investment? You're not going to get the kind of leverage you get on a mortgage to buy stocks, for example, or really to buy anything else. And what's it going to look like in 10 or 20 years when we're going to have all these people who weren't able to build up the wealth that our parents or our grandparents were able to?
Yeah. I mean, the co-living thing is a very interesting thing because it's popped up in London, UK, San Francisco, unaffordable places where you live together almost like in a dorm with other people, but you're actually 30, 40-year-old professionals, co-living together. There are a number of developers that are actually looking to do that in Vancouver. It's, sweet size compression and things like that are going on to be able to make the economics work as from a development standpoint, but also to make it work from a needs basis. To the point of over investing in real estate, I think that's a very important point, not just for the consumer and a household, but also for the economy. If you look at Canada's economy, the share of real estate in the economy, it is very, very high relative to a number of other countries. I love real estate. I am in real estate. But real estate is not a productive asset in the sense that you use that to create productive things from an economic standpoint. It's the result of productivity driving real estate prices. So there's a bit of a chicken and egg in Canada where we are not investing in capital equipment, software, technology, things that build real wealth. And so there's a very big risk that when you put all your eggs in one basket with real estate, maybe one day, who knows, you might see a correction in the housing market, but all your wealth is tied up in that. Probably not good. I think what people need to do is definitely they have to get into the housing market, which is very difficult. And now you're seeing this intergenerational transfer where young kids are borrowing from their parents because the parents have the equity. Unfortunately, that causes a class divide because some people don't have that. And we are now starting to see that class divide happen, and that can fracture society too. So I think there's a real issue around the ability to get affordability going so that there's not haves and have-nots in the long run, but that we're building wealth both for the economy, but also for households as well.
Yeah, to add to that, so even on our side at Dream, we're partnering up with a company called Buy Properly. We've invested in them, and they do fractional ownership. And you're going to start seeing more and more. It's very heavily in the US, but in Canada, there's one company in Vancouver, and then they're based here in Ontario. Again, have given individuals ability to buy out of as low as $2,500. Now, this more for an investment point of view, but it gives young individuals ability to still participate in the market, even though the prices are becoming out of reach for them.
So I know a friend that has more of one of those types of companies here in the city, and the equity position.
Is it Gavin Gibson by any chance?
No, it's Key Living.
Okay.
But I will say that that I think that's an opportunity for people to get in. I don't think that's the solution. I think that I think that the bottom line is that we need to really go back and look at some of the policies that we've put in place to that structured our financing. So if we look at it, we had the government implement anything under 500,000. Well, does that make any sense anymore? It didn't make sense when they implemented it. It helped, outside of the GTA, but it didn't help the GTA. So over 500,000, you got to put X amount down. So we have to really look at, all of these policies that we've put in place that have always targeted the first-time buyer. And we need to really look at, what is going to help a first-time buyer get into a marketplace. And then you've had the feds come up with policy where they created an equity program, and that's another story I'm not going to touch. So we really need to be more strategic on policies that are going to make sense and that are actually going to help a first-time buyer get into a marketplace. Mm-hmm. And that's what has to change. Is I think that ultimately it's perspective. That's the problem is we're not thinking outside of the box. We keep looking in the box, and when you think bigger.
It really seems like a lot of what's happening right now, there are ways to deal with the symptoms rather than the disease that's actually causing these problems, right?
Yep. Well, thank you for your
question. Or the ways to cope with the issue.
That's right. Robert, go ahead, please.
No, I don't think it's necessarily a solution. It's a way to cope with the issue of very high or poor affordability or high home prices. And if I put my economist hat for a sec here, I mean, if it allows people to continue to participate, therefore the demand in real estate is going to keep those prices up.
Right.
Excellent. So we have another question, actually 3 lined up. We have Carol Z. Can you please unmute and share your question?
Hi, thank you so much for organizing this, and thank you speakers for attending this event. I think this discussion is very enlightening. My question is about the vacancy home tax. And I know that TREB has posted their suggestions for some exceptions to who won't be included in the vacant home tax. Was just curious, what are you guys' thoughts on the suggested 1% tax rate? Who does this affect? Is it really effective? Will it increase rental home supply in the market? Just your general thoughts.
I guess you could look at Vancouver, because Vancouver actually initiated that. Part of the reason was there was empty homes, right? people who would basically, buy these homes, not be around basically, and reduce the amount of supply. It was partly, offshore money that was being parked in some of these places too. And it did have a material impact on the market for about 3 or 4 months, I think. And then people find a way to kind of work around it. I think governments are going to be tinkering all over the place on this stuff. They're going to be, nipping at the edges, but I don't think it deals with the fundamental issues. It's kind of dealing with as Robert kind of alluded to, dealing with some of the symptoms of things. But foreign buyers tax, vacancy home tax, stopping flipping, consignments on a new condo rental. All of these things are going on where people are making money at the edges of real estate. It's part of just the bigger story here that the market continues to move up and there's an opportunity. So the government's going to regulate that where they can. But I don't see it having over the long term a momentary blip, but it won't have a material impact over the longer term.
My question is, how many vacant homes are there in the GTA?
Yeah.
I mean, they're coming out with a policy. Well, the city of Toronto, because that's the city of Toronto, and possibly the federal level, because Trudeau is floating the same idea nationally. But do we have a sense of how many vacant units are out there on investors parking, sitting on money on a property?
We did. There was stats like a couple of years ago, because this was brought up a couple of years ago, and then then there was also like the question mark: was it foreign buying? Was this a challenge? So then we'd done that poll, but there is no recent poll on the results of how many vacant homes there are out there at this time.
I think the numbers were much higher in Vancouver. There was a study,
that I can see, and it was a long debate, and it was a very
long
heated
debate. I mean, you just have to look at electricity rates, and I think there was a
And-
study where the lights were off all over Cole Harbor. Basically, nobody was there. There's no community. It's less so in Toronto, but I think it's partly because the market is a bit bigger and a lot more spread out. So you will go into pockets. I'm just speaking, anecdotally in my own neighborhood. I do know that there are some people who are not around for several months, who are foreign buyers, and their house is empty, but they have people coming in to do the landscaping and things like that. That goes on out here in the burbs in Oakville. I know it happens out in Richmond Hill as well. So there's sporadic elements of that. But again, I don't see how that's going to change the supply of housing issue. This doesn't change anything.
Well, it will. I mean, what happened in Vancouver? It did increase, as you pointed out, a bit the supply of rentals. We saw a little bit of a bump. It's a bit more of a one-shot deal, because people react, don't want to pay that 1%. It's a pretty hefty tax when you think about it, because it's I think in Vancouver it's now 2%. They want to raise it of the value of the property. Now just imagine it's not a home buyer tax, and it's not a farm at the purchase. So it's every year they pay that, and so it's a pretty hefty tax.
But it didn't do much to increase the supply. I think that's the problem.
It depends what you're trying to address. If you're trying to address the rental supply, then it helps, like it's a one-shot deal. It won't do nothing. It will do nothing to the ownership supply, because it's unlikely that those maybe some investors will decide to divest and sell their properties, but that's, as far as I can tell, that was not the experience in Vancouver.
Okay, so thank you. We're going to move on to our next question. It's coming from Ruben Morrow. Go ahead.
Hi, everyone. Thanks for being here. There's been a theme that almost everyone has spoken about at least once, which is calling this a supply side issue. Housing is a very different market from traditional assets, and the fact that it's illiquid, traditionally illiquid. I guess the GTA is probably, a different story as it can go within hours, but you need land in order to build property, right? If a company has 1 million shares of stock, people are buying and selling that left, right, nonstop. But if we built, an additional, let's say we got approval from the government right now, no blockages, no nothing, and we could just go right to Algonquin Park, a couple hours north of the city, and just tear down a bunch of trees and just build up, 1 million units. That will still take a good number of years to do. and won't actually, in my opinion, I don't think it would actually solve the issue, because it has to do with proximity to the things that people want. It has to do with what's well, I guess the same thing, but what's in the area where jobs are. I know COVID has shown that we can work from home, but people keep saying it's a supply side issue, but it doesn't resonate with me as a supply side issue, because even if we increase the supply, I don't think we're actually going to decrease the prices.
If you look at a study, Demographia is a very good research house. I think they're running out of Winnipeg, actually, which is kind of interesting. But they did a very interesting study on land regulation and land use regulation in markets that regulate land, like the GTA, Vancouver, and other markets that are constrained by land, like Hong Kong and Hawaii, places like that. And then looked at unconstrained land supply, like places like Texas. And what you do see is, you go to Texas, you go to Calgary, you go to places where the land supply isn't regulated, supply sprawls out, and the home prices are very cheap. And as a result, what's kind of interesting, there's two dimensions to this, because it's very affordable to live in those places. A lot of people say nobody wants to live in sprawl, and the GTA used to be sprawl back in the, when my parents were back in the 70s and 80s, we were sprawling. And there was a turn of events where, we instituted the green belt, we instituted these land policies because nobody liked the idea of sprawl because of congested roadways and things like that. But if we truly think about affordability, we got a lot of land around the GTA. You just fly over it and you can see swaths of land that can be developed. We could be Texas. And you think about Amazon. Amazon decided to locate one of their major research tanks in Austin, Texas, because it's affordable to attract millennials who want to have the white picket fence and have land and have a lifestyle. So there are trade-offs when it comes to these sort of things. But I think we in Canada have made the trade-off to say we don't want the sprawl anymore. We don't want these tracts of single-family homes and congested roadways and whatnot, and to be Dallas, Texas. We want to have more high-density development, and so that's kind of where we're going. As a result, single-family homes are very expensive on a affordability basis compared to many other places in the world.
Right. So just to clarify, I completely agree that obviously if it's deregulated, and that's the way it is with any market, the second you start deregulating the market, that's when everything starts getting much more affordable for everybody. And obviously, as you said, there are cost benefit analysis on that. But what I meant was, like, in our current states, the way that we are now, we keep saying it's a supply side issue, but because we've been regulated for so long, even if we, if we were going to try to build up, I don't know, even 10% of the housing in the GTA around it, right? Take whatever 10% we have and put that around it. I don't think we'd see a drop of approximately 10% in prices. It would take a really long time for those to get built. And as that happens, the housing cost would still increase. It might come down to the level it was 10 years ago, which is today. But I don't think that, from an economic perspective, like theory, I don't think it would actually change prices, because I think that we're kind of stuck in the fact that we regulated things so much at this level.
It's this steepness of the supply curve and how far you're pushing it out, but it's also
exactly
the demand curve, right? I mean, the demand curve, these are two factors. It's economics 101. It's both supply and demand. So I think that's the issue right there.
Well, it's also dynamic, right? Because it changes over time. I mean, you're trying to catch it now. Right now, the supply is trying to catch up. The supply fell behind, and now it's trying to catch up to a demand that is, growing really fast. I mean, pre-pandemic, population growth in GTA was the fastest growing in I think any large city I can think of. So that's, it's a lot to keep up with. But maybe your question about affordability is more what type of housing units of affordability you're talking about. But I think if you were to build tons of condos, like overbuild tons of condos, those prices will come down. It'll probably do nothing to single detached homes, but those condo prices will come down. We'll make a form of housing, ownership housing, affordable, but you will not make the overall market that much more affordable.
I just want to add, I know we're running low on time, but Ruben, just like really good, when you look at it, what your perspective, it's a very good analysis. Like the reality is it's a vicious circle. And the history has shown us that when there was more supply, yes, price came down. But the reality is that right now we've got a marketplace that that demand is far greater. And even once the supply side catches up, the bigger challenge is how much more of that demand is still going to be there, right? How much more of immigration is still going to come into that? How much more is the job sector and the economy going to be? So there's contributing factors that could change things altogether, right? I mean, just like when somebody already owns real estate, and life changes on them. So it creates an opportunity to, or pushes on opportunity that they have no choice but to sell or to, invest otherwise. And so those factors have to also be considered. So that could also change things in the long and short term. Like we've talked about interest rates, although I don't think interest rates are going to be an impact, because the fact that we're qualifying at a higher interest rate, and many of us have already been through higher interest rates in past years, that I don't think that's going to be a contributing factor. I think it's going to be jobs that will affect and where our economy is in the coming years, is going to be the question mark that impacts how price is dictated in different pockets of the GTA. But you're absolutely right. Even the more housing they build, the more that we focus on immigration, it is going to be a challenge, because we've also got a marketplace where people will not move. And so then what happens, right? The circle needs to keep moving. But what happens when you've got a majority of our marketplace, like even we've witnessed this a couple of years ago in Toronto, where people were not willing to sell, people were not willing to move. So what happens? So I mean, there's still a lot of question marks ahead.
Yeah, thank you for that. Yeah, you're right, and I guess it also has to do with the fact that we're dealing with a local supply curve, but a global demand curve, which just always means that we're going to have more demand than supply, always.
Yeah, thank you, Ruben. And if I can just ask Veronica to ask her question really quickly here. I know we're running out of time, but I know your hand was up for a while, so go ahead.
Yes, no problem. So I'll turn my camera so you can see me. So I'll try to make it quick. So I was hearing the discussions and everything, and people mentioning it was a really great conversation going on. But my question is, what are the environmental impacts of having all this real estate? Because, when you look at Toronto, all these condos, you don't really see much greenery. And then you go to the GTA, we have like townhouses and stuff like that. There's not much greenery. Sure, there's maybe a park, but that doesn't make up for all the lost land that we had. So what are the environmental impacts, before COVID and maybe after? So maybe in like 2 minutes or less, if you can explain it. What are the predictions of everyone?
I think if you look at Europe, they've moved to a higher density form of housing that's a little bit more efficient. And part of it is about lower carbon footprints than single detached. That being said, there's new building practices that are being built in now that are helping to reduce the carbon footprints, the impact on land for single detached. But I think that's what everybody is saying in the sustainability development side, is that if you move to a more European model, where there's a little bit higher density, more efficient use of the resources that are there, that reduces the environmental impact more so than building sprawl. So we come back to this whole idea of sprawl and congested highways and all of this sort of stuff that's encouraged by single detached homes. That's the environmental impact, obviously, as well.
And amenities that are reasonably close to where people live, right? So you don't have to drive hours to go shopping or go to school and that kind of stuff.
And the other factor to keep in mind is the Oak Ridges Marine. Like, I mean, we've built all across it, but there's always been restrictions for the fact of environmental concerns and issues. And I don't think that part is going to change. And I think that's always going to be high up there. I think that what both Carl and Robert said is when it comes to resources, and I mean, Isaac can even speak on this, and building supplies, we're going to have to really look at more what's in materials and how we can really help with that whole carbon footprint. So it's materials, resources, all of those are going to be big factors. And maybe there's even policy makers will be looking at ways that will also push homeowners to continue on the green initiatives. I mean, it was once a priority that got shifted. So the future, you know, we've seen this over and over again. And I'll just say this really quickly. Like, I used to be a host on television and I had a green show, and it was cut because the environment wasn't considered important. And here we are, you know, 10 years later saying, hi, yes, the environment's important. And so, you know, it's that wake up call of realizing that, you know, we need to act now. We need to start planning these things. So we need everybody involved. So this whole aspect of real estate is it's just not one group. We need everybody at a table and really bringing out the ideas that are going to really change the way that we live and how we live in the future for generations to come.
Excellent. Okay, so thank you everybody for your questions and your answers. I think we are going to wrap up right now because we're a little bit over time, but it was an interesting discussion, no doubt. So in closing, I'd like to say thank you everybody, especially the attendees, for joining us. And this is coming from the Ryerson Economics Alumni Association and Ryerson University. And once again, special thank you to our featured panelists today for taking the time to share their experiences and valuable insights. I'm sure a lot of people in our attendance today really benefited from this. So everybody, if you've enjoyed this event and haven't already done so, I would also encourage you to, you know, follow us on social media, website, sign up to our newsletter, and stay up to date and stay in touch. But altogether, thank you everybody. I hope you have a great evening. Stay safe. Bye now.